Let's bring in Kari Firestone, Chairman and CEO of Aureus Asset Manager, obviously CNBC contributor, star of Halftime Report. Kari, good to have you on. I mean, the NASDAQ's up 15% for the year. The median return of the NASDAQ going back to 1972 when it was founded is 12.6%. I'm not a math major, but that's more than 12.6. Have we made our gains for the year?
Oh, gosh, Brian. Well, thanks for having me, and great to see you. The market obviously has had a big recovery since that, kind of catastrophic end to the year when it was just oversold and everybody was just plowing out of stocks as fast as they could, particularly on the risk side. So what we've seen is a return to risk. The NASDAQ has had a gain. Some of it's short squeeze, some of it's just sort of bear squeeze. I mean, the bears have been so dominant for the last 6 months, particularly on growth stocks and NASDAQ tech names from mega cap to small cap, that any buyers have pushed up the market, and you're starting to see the people who have been sitting on the sidelines come rushing back in. And that's gone from the names like, you saw Google today. A lot of the big names, CRM, you look at Salesforce and you think about the largest of the growth names that nobody wanted to touch. They've shown some interest in cost control, reducing employees. Meta's up, 80% from the bottom, plus Netflix 100%.
Yeah.
So a return to risk taking, but it's also broader. You've seen much of the market move higher. It's not just these names, and perhaps it can continue somewhat more. We're at a level of the S&P 4100 plus. We bottomed at 3577. We can go ways back before we're at a level that you start to get nervous. But with some of the moves, of course, you have to take a pause and say, can these stocks go higher? But there are other stocks that might begin to take up some of that slack.
Well, I know there's some names you like, a name like a CarMax, a name like a Schwab, a name like a Charter, the cable company. But I want to talk Meta for a second. You referenced it. Stock's up 80% off its lows. I understand they laid off a bunch of people, which is tough for the people, by the way. I understand they did a gigantic stock buyback. Didn't hear a lot in the media from the politicians about that one, but still, they did a gigantic buyback. But should that account for an 80% move off the low? I mean, it doesn't seem like it should. So somebody either got it wrong in selling it or is getting wrong in aggressively buying it now.
Yeah. So we've been an owner of Meta. I mean, I wish we didn't own as much as we did, as it fell, as it did very hard. But we've held on to it, and we had bought some more during the year as it was declining. It traded down to about 11 times forward earnings. It was just a very inexpensive stock. We understand that there are problems with the metaverse and what was going on with some aspects of the company, and people, constantly take shots at what's the message here, and is Instagram losing market share? What about TikTok? Where is the metaverse going with Facebook, et cetera? On the other hand, enormous cash generation, still 2 billion users, regular users, and most of the company is growing. The metaverse, we don't know what it's doing, but most of the company, the core business, continues to grow, continues to generate enormous cash. And they bought, as you said, 10% of the stock back, and then they announced these, big headcount reductions. And the activists have been clamoring for this. This is what is driving a lot of stocks right now. It was a low valuation, oversold, short squeeze began, and then you started to see activists come out of the woodwork and say, we really like what they're doing here, and this is what we expect from the big tech names this year. You can't spend wantonly. You just have to have some religion and get a hold of where you're going on the cost side, not just spend and spend, because it's not 2020 anymore, and everyone isn't at home just on Facebook all day.